Tuesday, February 7th. Market analysis, Stan Ehrlich. Good morning. It is 10:40 California time, and we have an ER automated red sell signal in progress in the S&P 500 right now. This is a very powerful signal if it continues to stay and close below yesterday's closing price. We're only down 92 cents. If there's a rally that it gets higher than yesterday's closing price, the red line will disappear. It will not be a bearish engulfing at that moment, and it will be actually a bullish engulfing. The engulfing part you can't change. We were higher and lower than yesterday's high and low, period. Whether it closes higher or lower, that's to be decided. Right now, it is a sell signal. We are lower on the day by a modest 60 cents. By the time this recording is over, we'll probably get a better feel for whether it's going to stay a bearish sell signal, which immediately implies to me that this overbought condition in the last couple of days is very serious, more so than I thought. And when you take a look at the damn thing, you'll see the overbought condition that we did get into here at around the high 70s. We haven't had since August, when the market topped out, and I'm not implying it's going to be a huge break like this into new historic lows for the bear market. New lows for the bear market, not historic. So I'm not saying that. I am saying that it's increasing the likelihood of coming back to the neckline, which we don't really want to get below. And if it does, will the old bull trend line hold? That's pretty iffy. And where the hell is the 200-day moving average going to be at the time? Not too far away. So this bearish engulfing, if it continues to be one, and I hope it doesn't, can't get more bearish than the neckline, and that is around 400, and I'll give it a few days. Next, do we have the same thing in the DIA? And the answer is no. By the way, let me finish up with the spider. We ended up creating a bearish engulfing. Our color code changes the 1-minute price bars on the same symbol, in this case SPY, to red, because it knows that we have a daily ER sell signal in progress. These 1-minute red bars will stay red unless it starts to close above the previous day's close on a minute-by-minute basis. So we basically have to stay below this particular, well, that's not the close of yesterday. I was close. We have to stay below that horizontal line, which is the high of the rally 2 minutes ago. So basically we can't make higher highs for the last 10 minutes. If we do, we'll start to get higher than the previous day's close, and the red will disappear on the 1-minute chart, and the red will disappear on the daily data chart as well, simultaneously. And then if it goes back down again, they'll turn red again. We really are concerned mostly, by far and away actually, where it closes. DIA now does have a bearish engulfing in progress. We have an outside down day, currently down on the day at 150-ish, but it's not red because we didn't get overbought within the allotted number of past days. That's why the spider is red. Let's see what's happening to the Qs. They could have, and they almost will turn red also if we make a new low for the day, which is almost positively going to be below yesterday's lows. That's the key. We were overbought within the allotted number of days only 2 days ago, and 3 days ago, and 4 days ago. But we now have the beginning of support holding today's low so far and yesterday's low. So if we break that, we're going to drop into the Brea tar pits muck here and maybe go all the way down to the bottom of that red zone, which is another support area. That's quite possible, especially if we have an outside down day. So almost a bearish engulfing ER sell signal in the Qs. If there's new lows, it's going to get one probably. We cannot have one. We would have one on the DIA just simply because it wasn't overbought enough in the last allotted number of days. So a bearish engulfing, yes, but not in overbought condition for a custom relative strength index. So we don't change any colors, period. What about the red here on the E-mini? You're darn right. This is a bearish engulfing. Remember, it's delayed data. I really don't need real time. And we just turned red in the last couple of minutes here on the 1 minute ES symbol, the E-mini S&P. So it is catching up. It's 10 minutes late with the big boy above, and it will bottom out. You're cheating by 10 minutes if you're trying to trade this chart. Anyway, very important stuff. Real time. Let's go to futures. I'm only going to talk about the futures contracts that have something currently active, like a brand new signal, recently active, like within the last month or less, or something that's profound enough to talk about even though there's no signal. So I'm going to start out with the downside breakout in silver the last couple of days, which has gotten now oversold on the first breakout day, which is damn big. And I mean to tell you that double top was formed only the day before. We dropped from 24 and 77 down to the low of the next day to 2220-ish, 30. That's quite a big break in 2-day period of time. And from a failure to make new highs, a double top formation potentially at the time, and a downside breakout, which was sustained on a closing basis. So bearish, obviously. The long-term trend is up, but there's a variety of other support levels that we could turn around at, showing no signs of it yet, at lower levels. So I'm looking for 21, 10, 20 area, 30. Not too much further, but more. Next chart. We've got gold. We talked about that gigantic bearish engulfing. It worked great. The next day it was down huge. Yesterday we got out of an oversold condition a little bit. Today it got out of the oversold condition a little bit more, but it was still oversold at the lows. And it's rallying on a close-to-close or current quote basis very little. I think this is about to fall apart and make new lows by a significant amount this week. And today's Tuesday. Next chart. Soybeans. We caught the highest high so far with a bearish engulfing. We never made a higher high, although we came close a couple of weeks later. I don't like that kind of price action, but it did immediately produce a profitable ER1 and ER3 trade that lasted 3 days. And that's basically what the system is built for, swing trading. But it also scalps automatically, and you have control over the settings. It also long-term investor type in position trading, and you have the settings. So the point of the whole ER signals is simply picking a major top or bottom before it's obvious to everybody else. I'm wrong. We have stops in. They're tight. But the trailing stop normally used is a relatively tight one for most people, and it manages to lock in a profit real quick. Sometimes the same day, sometimes a couple days, but pretty quick. A long-term investor might keep the stop at the yellow original stop for weeks until it makes it down to, I don't know, 1440. Depends on their preference. We can do that. Soybeans, I feel slightly bearish, but the trend is up. This doesn't look like anything particularly serious. If we do start closing below 1475, then you could have a downside breakout, and this red bearish engulfing might be the top of something much, much more significant. I will mention that it kind of looks like a head and shoulder top here. The first shoulder high, December 30th. The top we picked with a bearish engulfing ER sell signal. That's exactly what we want and what we built this for. Too bad we didn't get one on the first shoulder and the last shoulder. I don't think I've ever seen one. It was all 3 parts of a head and shoulder. 2 out of 3, yes, but I don't think all 3. So this rally high is not a higher high. It's still in the ballpark for the price levels that you might expect to shoulder. It is starting to make lower lows of the last couple of days. And if it starts closing below 1506, I'd call this a potential head and shoulder top in progress. I'm going to have to draw on the neckline early here, just in case things collapse too quickly, and I don't think they will. But this would be the pivot point for the first point, and about there, and we're going to snap to lows. So this would be exact. There we go. Save, save, save. There's a potential head and shoulder top. The timing is about right. The distance from the head to the left and the right is about the same. Could be exact for that matter. Can't tell just without measuring. So, okay. Maybe head and shoulder top in soybeans. I think it's very early in the stages to talk about this, but that's it. We'll see how it develops. I'm neutral at the moment. It's a little bit bearish. Next chart, heating oil. Well, when you're hot, you're hot. And I don't mean that because this is heating oil, a little pun there. So we picked the top of the market exactly to the day on January 24th. A couple of days later, we have another sell signal. Yesterday was the lowest low since those dates, and it's rallying a little bit today. We were oversold, and no surprise, we're bouncing. The next time down, and I do think there's going to be a next time down, and maybe it'll come up to 3, for example. Yeah, 3.0789 maybe in that ballpark, and turn down the next time down, and it's got a new low and a new low close since early December. Then it's on the verge of its last significant support level for months, plus new lows for many months are close by. This could turn into a really big bear move. I'm glad to say we caught the top on that rally. Oh my goodness gracious. June 24th, great balls of fire. And we got within 2 days of the highest high for the whole damn bull market and caught a bearish reversal too. Wow. If this thing breaks out to the downside below 2.28, we picked all 3 major highs, except for, 2 days off on one of them, and a good rally. Not exactly the best, that's for sure. One bad signal. Wow. Bearish on heating oil, maybe very bearish. Next chart. Live crude oil. We got the top of the market in crude oil back on June 14th. Tops for 6 months since and back only have happened, guess what? Once a year. Once every contiguous 12 months. The high for 6 months before and the high for 6 months after. Okay, I won't say it again. And this is the almost the highest high for that period of time. It is the second high in a broad double top. And I can't help it. I think we're going to have another downside breakout on heating oil and hit the dust here. Make another new lows, get oversold again, drop like a rock. The last sell signal has been extremely good. It made a lower low 1, 2, 3, 4, 5, 6 days in a row. This is the first day where the low is not lower than the previous day, and it was oversold. So, hey, classic. Looking for new lows, looking for a major downside breakout, looking for prices well under 70, maybe even close to 60. Pardon me, in the next 2 to 4 weeks. Next, the E-mini has a bearish engulfing. I don't know that it's going to stay that way. Remember, it needs to close below the previous day's close to stay a red bearish engulfing ER sell signal. Otherwise, it's going to be a bullish engulfing. It has no other choice to close unchanged exactly, and that's not going to happen. So it's either going to turn white again if it closes higher, because it's not a bullish engulfing with an oversold ER signal companion. Just simply a bullish engulfing, which is great. It's tested the neckline so far accurately. If this works and it stays red, then we should expect it to break the neckline and drop off some significant amount, frankly, more than I'd like. Next chart, cocoa. Head and shoulder top still good. Downward slanted neckline is fairly substantially downward slanted, but it's pretty much there. We have to see how this develops. Today's a nothing day. Next, 10-year notes. Looks like it wants to make new lows. Probably yes, very soon. Probably challenge 112. I still believe it is in a base building pattern of some sort. Don't have a handle on what pattern. But I can tell you that by the time it gets down to a little below 112, a few days, it may very well be below the oversold 25 level on my custom RSI, ERRSI. And that would imply support, oversold conditions, a bounce. It'd be great if we got a bullish engulfing at the same time. Next chart. Bonds. Same kind of comments. Next chart. I'm into those that I'm not going to make comments about because nothing's going on of particular significance. And that's the end of my commentary for today. Market analysis. I'll be covering forex and sectors tomorrow. Have a good day.